What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is September 16th of 2024. Well, folks, I hope you are having a fantastic day wherever you are, because in today's video, I'm going to bring you guys what I would feel is breaking news in the crypto space, something that I think is really imperative to discuss, but I'm seeing little to no one talking about, and it has to do with one of the key signifying narratives of Bitcoin and what people hopefully believe could lead into a new bull market, but is simply not showing up. We're going to be talking about that as we go throughout today's video. I want to dive into the price action, which is the most critical element, but we'll also be talking about altcoins. We're going to be talking about how they're performing against Bitcoin. We're going to talk about the AI narrative, the whole shebang. We're going to do a full macro Monday. If you guys happen to enjoy my rambling, consider dropping a like. It's a great way to support the channel. Grab a cup of coffee, and let's go ahead and kick things off. So I want to start here by talking about price action here, guys. So far at the moment, what's nice is that we have been able to establish what appears to be a higher low here versus the August lows here in early September, but we are still so far establishing lower highs. This may change over the next couple of days. Bulls are at really a make or break moment where they've got to show up here. I can't emphasize this enough. We have finally, for the first time in nearly a month, reclaimed the 21-day moving average, and after facing some resistance at a lower price point of the 100-day, are seeing whether or not after this 3-day pullback that we can find support and make that momentum moving average our friend again. It can make a baseline of support for price to accelerate higher and get back to new all-time highs. If that can't happen, if we cannot hold the 21-day, as we've echoed before, this is likely going to break through, and it will probably go through the prior lows we've seen as the lows have been accelerating, the capitulation's been building up, and we could whipsaw down here into the 200-week moving average, which again can very well happen. I know some people think that's too pessimistic, too bearish. Well, if you do, hear me out on this, right? While I do believe that there's a chance the bulls could reclaim, and we're going to wait and see if it can get above those moving averages from there, that would be maybe my point. I look to start maybe building some positions, or maybe we wait for the break on the previous all-time highs, especially if you're trading altcoins like us. The big thing I want to bring your attention to, and I'm baffled. I don't see many people really talking about this and sending off the alarm bells, because so many people were talking about it as the key narrative of this cycle, that this, alongside the halving event, was going to send Bitcoin to $100,000, maybe even $200,000. And of course, if you believe the permabulls and people who are using the same time-tested methods because it's what they've always relied on, like Plan B, etc., who are telling you that Bitcoin's going to $500,000, do with that as what you will. I'm here to give you guys something that I think is very critical to analyze, and it's something that is very easy to forget about unless you're really meticulous about watching it, and that is the ETF inflows. And I understand some people may say I'm beating it like a dead horse. Some people might be wondering, Nick, this is boring. Why are we talking about the ETF inflows? The reason we're talking about it is because we got to get down to some fundamental questions, and we're going to get to it in a moment, but we need to ask some serious questions here if ETF inflows are not showing up to the plate. And that's what I want to talk about here today. If you take a look here, this is the essentially bi-weekly analysis of, basically it's monthly, but so far we're seeing the bi-weekly increase or decrease of Bitcoin across the board in these ETP products. And what we see here very clearly is that across the board, we have a net outflow again, and a pretty significant one, right? Around 5,000 to 6,000 Bitcoin being pulled out. Now, I understand a lot of people say, Nick, these are 2 weeks here, maybe things change towards the end of the week, and this is probably just GBTC outflows, but I want to take time to break it down, because it can be very easy to miss that if you take a look at even IBIT, this is the premier ETF for Bitcoin. We can see here that with IBIT, we have less than a couple Bitcoin being added here, right? In fact, technically here, no. Yeah, I was seeing that right here before. Essentially, this is a net outflow. I apologize. So IBIT actually saw weekly outflows, 357,509 Bitcoin down to 357,277. And yes, you've got GBTC outflows playing a role in that, but that's about half of the story. You've got IBIT outflows, you've got Fidelity in this case, or FBTC, seeing significant outflows, and of course you have some ETFs here that are seeing slight increases. But net overall, it's about half of it coming from the other ETP products, as well as another half from GBTC. Now, I want to make one thing clear here. A lot of people negate GBTC and say that this doesn't matter. It absolutely does. And I want to make that very crystal clear, guys. There are things where we can debate about things. We can kind of have differences of opinion. The GBTC outflows, irrespective of if those Bitcoin are going to other ETP products or is being withdrawn is absolutely changing the supply and demand dynamic of Bitcoin, right? This was the original spot ETP product. It was an exchange-traded note converted into an ETF once all the ETFs got approved by the SEC. Irrespective, though, if there is Bitcoin outflowing from this ETP product, it's got to go somewhere. Hopefully, it goes into one of the other ETP products, which is what I think in many cases is happening because there's lower management fees. But even with that, it is still removing spot Bitcoin that was already being held in these ETP products. In some cases, there's a clear outflow from the Genesis bankruptcy, etc. But here's the kicker, right? It's okay if we see the other ETFs coming in and seeing the increase, basically absorbing that Bitcoin and maybe taking on new liquidity outside the market. But what we're seeing now is not just GBTC, we're seeing IBIT, we're seeing Fidelity, the most premier ETP products, actually seeing net outflows and significant ones. This should be sending alarm bells. I don't care if someone's bullish or bearish. This is very concerning here because at the end of the day, well, we like to sit here and say we don't need Wall Street. Bitcoin is all about, decentralization. Let's get the big banks out, right? Some people were against the ETP products coming out and institutions getting involved in Bitcoin from a moral perspective. If you are coming to me on this channel, guys, as much as I love Bitcoin for the philosophical reasons that you do, at the same time, we are talking about market price. And market price is not some hypothetical thing. It is a equilibrium or in a balance between supply and demand. And you've got to ask the important question of if the ETF products are not coming to save the day, if we do not have institutional capital coming in, and in fact, institutional capital is becoming a net seller, then who is going to be the buyer? Some will say dollar cost averagers who are buying on Coinbase, some family funds, hedge funds, whatever. Guys, we got to be real here. We are exhausted from our inflows into this market, right? And it's been like this for a while. In fact, over the next 2 weeks, if we don't really get back up here to 912,000 Bitcoin, we will have essentially outflowed Bitcoin from the ETP products for nearly 2 months. It's already a month and a half here, right? Since back in late July, towards the close of the month. So I don't know how to paint this in any different picture. I wish I could be more optimistic about it, but you see very clearly that this is having an impact on price here. And you've got a lot of large sellers like the US government that might continue to unload. You've got Mt. Gox distributions that's still going through at that moment. A lot of people who probably withdrew and still haven't sold, right? That still could play a weighing effect on Bitcoin's price here. And I want to emphasize that again, altcoins are not, void of this criticism. In fact, they're even more of a concern for me personally if Bitcoin isn't able to really formulate an uptrend of higher lows and higher highs. Because if Bitcoin can't do that, altcoins, which are still setting in lower highs here, slightly higher lows, right? This could easily continue to break back down. We're getting way too comfortable with the 200-week moving average, and I would expect a lot more resiliency at this level, a lot more buyers coming in. But to be fair, with the ETF inflows looking, or outflows for that matter, looking the way they are, I can understand why altcoins are not really catching a bid and people aren't buying them up. Right? These are the things that, again, we talk about within the newsletter. We also have our mid-month webinar coming up here, guys, later on today if you guys want to sign up for the Dash Report. It's our newsletter here on the channel. We've been really trying to warn about this, trying to take a look at it from a data perspective over the last couple of months. And a lot of our momentum moving averages, as well as some of our key indicators that we utilize, are starting to signal some warning signs around Bitcoin's price. If you guys want to get access to these additional insights, it's less than $1 a day, less than a cup of coffee. It's a great way to support the channel. So if you guys are interested in that, I'll leave a link down below. You can get 20% off if you sign up for an annualized basis. Again, you guys get a whole range of different things. You can join the webinar, ask me some questions, dive into the charts. We'll look at some of your favorite altcoins. But feel free to check out the link down below. Again, just overall, it's a great way to support the channel, and you get a ton of great additional content. But getting back to this key thesis here of markets really struggling at the moment, we take a look at altcoins, especially in their Bitcoin comparative pairs, right? It can be one thing that, Bitcoin's trading up a little bit, and of course, altcoins are going up a little bit in dollar terms. We care about whether or not altcoins are outpacing Bitcoin, because if they aren't, we don't want to touch them with a 10-foot pole. Why hold something that's going to pay you less than the king, right? Than Bitcoin, which is a very probably the safest play in crypto, the most time tested, right? We see Ethereum here. I think Ethereum is having a real identity crisis right now. The base ecosystem, as well as hundreds of layer 2s, have just completely eaten alive any kind of demand for ETH. Not to mention as well, at the end of the day, I understand some people say they're a positive feedback loop for ETH. I think at the end of the day, guys, DeFi as a category, even all these L2s out there are no new exciting applications. The space has not seen any dramatic innovation over the last couple of years. And I really can't name you one application I've had to use in the last couple months where I was just like, wow, game changer. Gotta get excited and bullish about crypto because of this. I remember back in DeFi summer, I remember back during the ICO era where the sky was the limit. Everything was going to be disrupted by blockchain. And now I think reality set in, and the lack of innovation is just abundantly apparent. And the way I know this is the fact that we broke the 100-month moving average back in the summer, as we pointed out in this channel. It's not looking good for ETH. We have broken the long-term multi-year line of support. We struggled and treated it as resistance rather than support, and have since then set lower highs and lower lows. I think that this is just going to continue chartering down, and until we get some significant trend reversal of some sort that signifies that this trend, this downtrend is over, I'm not touching it. The same goes with Sol. I mean, Solana obviously is in a slightly better spot because it has all the meme coin volume. It was obviously an up-and-coming play in the last cycle, and many people believe that it could go to new highs in this cycle. We have not broken our previous BTC highs from back in September and November 2021. And since then, it's looking like the same drawn-out game of distribution. Large insiders who bought large stakeholds of Solana from the FTX bankruptcy, I think, are just cashing in slowly and steady, not to scare people, to still give people hope that this thing could start to charter higher. Well, you need not look further than the actual price action. We have not only been stalling since back in December of 2023, so we are coming up here. In a couple months, it will be a year, but it's well over 9 to 10 months now. And now we are struggling we're actually using the 200-day as resistance. Big change from back here. That was the point where people were buying, right? Sometimes not even letting it touch the 200-day. Those blue lines here, that's now acting as resistance. And you've got the 200-week sitting right here, real pretty, waiting for a retest. Not to mention at a range of resistance back here in November 2023. And to put it in perspective, to talk about why this is so significant, that's another 25, 27, or 28% correction. So you do not want to be buying into something that's clearly showing no signs of life and looks like it could easily pull back here to a range that it's tested back in the past here. This was prior price retestment back here, resistance. Maybe it can turn that into support. We'll see. Let's wait. Let's wait around and see. And maybe I'm wrong. Maybe it starts trending up today. I don't really care about picking up at these prices. I want to wait until it gets above those moving averages and actually shows that it's got some life to it. I want to set some standards here so I preserve and protect my capital. And this is like the kind of big point that I want to echo, guys, is that so far the large caps are looking really bad. You're seeing that some of the small caps in certain narratives are doing pretty well considering this environment. But again, even in the hot narratives that we're excited about, like Bitcoin infrastructure, DePIN or AI related plays, meme coins, some of the big narratives we're focused on, they're not showing what we need to see just yet. Stacks, while yes, I love that it's been neutral since June of 2024 against Bitcoin, so it's not bleeding at the moment, we are still seeing that it's struggling at that 100-day moving average. Same exact thing as the last few times. It was not able to break through there. It's another point of distribution. Makes me think here that we're coming down here at a minimum to this line of support again and are just going to continue consolidating for a while. No serious trend. Ordinals against Bitcoin or ORDI, right? Pretty much neutral since where it was back in May, which is good, right? We're not in a significant downtrend like we were back in the past. And we are, given the foundation, maybe having a chance to break through. We're on that 21-day moving average, but the 21 day is pretty neutral. We're just, again, going sideways. We're not trending higher and using that 21 day as real support for higher lows and higher highs. So I'm not in any serious rush to try to bet that this is an official bottom here and that it's just going to trend up from here. I don't mind paying a slight premium. I want to make sure that there's momentum. I want to set real standards here before I'm going to be building positions. And we can see this across the board in other Bitcoin infrastructure plays. You're getting these kind of small pop-offs in ZETA chain, for example, where it had a really nice run up back here in August, faded all of those gains. We got a smaller move yesterday on Sunday. And it just seems like we just can't even catch a serious bid. Any opportunity where markets are moving higher, someone is selling. And this, again, is something that I'm going to echo here is a very important point, guys. There are so many altcoins out there. There are so many different loose narratives that really don't have any fundamentals backing them up beyond even just meme coins. And I want you guys to keep in mind that anytime there's upward price action and you're seeing people selling, which establishes these kind of lower highs and lower lows, that lets you know that there are a ton of insiders who were selling you on the idea that it's going to go to some price, and they are slowly but steadily distributing, getting rid of their positions. VCs, angel investors, insiders in the team, they have every incentive to do it. They want to get out before the other people's tokens unlock, and that's how this thing has been working for the last couple of years. Just launch a new token, slowly but steadily sell it, make millions of dollars. That's what essentially they're doing. And unfortunately, it's so sad that if you don't really focus on fundamental projects that have real good token economics, they're trying to do something real, you can easily get trapped in these projects. There are more serious plays, I would say, like Render. But even Render here, lower highs still. We caught a slightly higher low here, but the fade on that recent high was really bad. Not to mention, it looks like we're rolling back over. We can't hold the 21-day. Not a good look here. Any potential, I'm not really one to look for support lines in such a short period of time, but if you were looking for one there, maybe a wedge pattern here between the previous points of resistance, right? Kind of rough there, but you can see what I'm kind of getting at. Didn't hold it, broke through. Not a good sign to see. So that for me is a really big warning sign for the depend narrative. We can see here Fetch, one of the strongest plays here in the market. We wrote about this in the Dash report as one of our trade setups back, I think, in July or in August. I think it was back in July and stuff. We were kind of talking about this as a range. Really, for the past couple months, we really fixated on Fetch being a play that could show some serious promise here at this range. And what do you know? So far, that's really paid off for those who took the trade. We are now testing up at the 200-day, one of the few altcoins that's actually doing this and is well above its 21-day moving average. And it's had multiple retests on that 21-day moving average on good volume. So this is one of the few silver linings here in the market, one of the few plays that actually looks kind of nice. But if I go here through meme coins, right, but they are still struggling here. If we take a look on the daily time frame, just going sideways, turning the 200-day, which could have been support before, into clear resistance. No serious ability to get above the 21-day moving average. It's just price analysis, guys. The moving averages don't lie. I'm not trying to be negative or criticize these, but keep in mind these meme coins, guys. I'm all about trading the trend. We made great money back when there was a ton of liquidity in the space. Back in Q1, we just kept going from meme coin to meme coin, spotted a lot of great charts, made some great returns, risked minimal capital, and made great returns overall for our portfolios. But if the momentum isn't there, and you've got tens of billions of dollars of supposed value in meme coins, that gives a lot of opportunity for the insiders who created these things to just slowly distribute and unload positions into any optimism. Any liquidity that's willing to come in and speculate, that's the exit liquidity for insiders. And it's clearly showing that they don't have much confidence in this market. If they did, then they would be holding and selling at a much higher price range. But they're doing it down here rather than up here. What does that tell you? It tells you that they've got a lot of empty bags of sand and they're ready to sell it to you. I know it sounds cynical. I know it sounds mean. I'm just here to let you know that there are some really nasty players in the crypto industry, and they will do that. And if you can observe the clear lack of fundamentals and there's the lack of momentum versus, say, 2017 or 2021, and the lack of new money and new participants coming in, I think they smell blood in the water, and I think you should too. Until we see those signs of momentum return, guys, I don't think you should be risking so much of your liquidity in this market. And we can see that across the board, both in Bitcoin, the broader indices, the large caps like Ethereum and Solana, and you can see it in practically any altcoin you want to take a look at in the market. There are very few exceptions, Fetch maybe being one of them, right? So I just say that as a bit of a warning here. And I also wouldn't just bring this criticism onto crypto. There's obviously the talking point of equities. So far, equities are holding up relatively resiliently around the AI narrative. NVIDIA, for example, is really just a couple percentage points away from its prior high. It's been around $120 a share. Previous high was at $140. We're not even coming down to touch that 200-day moving average, but we're seeing the same signs here. I want to make it very clear, if we step back in history here to what we saw with Bitcoin, the inability to really make the 21-day your friend. right? You can see here, same thing here with uptrends. When you really get to that breakaway, right, when you're really in an uptrend, the 21 days where price should be bouncing. And so long as it's riding on there, you're gonna have gap ups, you're gonna have continued acceleration in price to the upside. That's what you wanna see. That's where the fun really begins, right? We see it over here is what we saw over here. But when there's chop at that 21 day, when you're kind of waxing and waning, slowly kind of going and peaking and troughing over that 21 day in a kind of waving formation, that gives me a couple of early warning signs that I should be a little bit cautious. It doesn't mean that this can't reclaim it and whipsaw higher, right? We saw that over here, right? We were able to turn the 100 day into support multiple times. Finally, we squeezed up higher here, and then we start another uptrend. But it's always a cause for a little bit of concern. The semiconductor, again, similar to back in that same time range, like in October 2023, it's coming down on that 200 day twice here, right? We've still got a ways to go before we get to those highs. We still got to test the 100 day and see if we can set in a higher high here versus the one back in August. So again, there are some signs here, not to mention FANG. This is something that I think you should really be made aware of. The FANG index, which is Facebook, Amazon, Netflix, and Google, right? So we're not talking about Apple or Microsoft here or Tesla, but these companies, these stocks here, had one of their biggest bottom to top uptrends, like the one from here in 2016, here to 2018, here from December 2018, here to August 2021. We had the biggest one here from November 2022, here to the new all-time highs in July, around 212%, 183% before, 162%. So FANG stocks have recovered extensively off of the AI hype and the broader AI narrative. Silicon Valley is shoving AI down everyone's throat. And while I do think that there's definitely some exciting potential here, yes, I do believe ChatGPT and generative AI has some place in this world as a piece of technology. And I think that there's definitely that ability for us to have some kind of S-curve moment where AI innovation really accelerates and it disrupts the world in a really big way, right? I want you to keep cautious about these short-term intervals here within markets, these kind of 2-year rallies that we have that are usually met with pretty harsh corrections. If we don't look at it both ways and understand that these can go through some pretty harsh pullbacks here, a 38% pullback here, a 60% pullback, I don't know what we could see here realistically. Maybe even it's a smaller one. Maybe we just come down to the prior highs here. Still, 25, 26% correction could be pretty brutal for some people. It'd be best to be buying in when there's actual clear signs of momentum. Right now, we are chopping sideways. We have no serious trend. You can wait here until a break of 300 if you really think that this is going to accelerate higher and wait for serious signs of momentum, or you can wait for lower prices. That's really the name of the game here. We don't want to buy when there's chop in the market. It's not fun. It's not clear. It's not easy. We don't want that. And another thing here as well is obviously our historic line. I've talked about it many times. I know some might be tired of me bringing it up, but I will keep bringing it up here because it wasn't relevant back in 2022 and 2023. It is now. We are back up against this 95-year-long line of resistance in the channel that we've been in the S&P 500. The S&P 500 is probably the best index to measure the stock market, broadly speaking, to measure valuations. And we can see that we are just a few hundred points away. We look like we're ready to spring up and have a really euphoric rally into all this rate cut hype, the rate cuts for the Fed and probably other central banks that will follow. It's gotten everyone really juiced up and excited. That could lead us here to 5,900 points here on the index. The question remains when we get there, is it going to be some breakthrough moment where we break through and really just continue rallying on because AI is going to be so incredibly disruptive? Or are we, in accordance to history, going to get shot down at this level and have a pretty harsh pullback? That's the ultimate question. We talked about that in last month's report. It was one of the many articles that we put out where we talked about these things. Actually, it's in this month's report. So if you guys sign up for the dashboard, you'll be able to kind of read into that. That's what we wrote back in late August for the September report. This is going to be one of the big question marks, guys. And there are a few key signs you have to look out for in order to understand whether or not this is really going to be a moment where this kind of squeezes through and goes through another year or two long hyperbolic, parabolic rally here where a lot of names do phenomenally well, or if it's going to be a period of time where we correct lower when everyone least expects it. So anyways, just keep that in mind here, guys. Above all, I think the AI narrative is definitely something that's interesting. But we are going to have to see if price action continues to show up to the play, if the markets really perceive that that narrative is still here to stay, and that the demand for GPUs, the demand for data infrastructure around AI is going to continue to pick up. It's a very interesting thing to kind of keep on our radar. And that'll also play into some of the crypto AI related plays like Fetch, as well as plays like Render that play into the GPU market. So that's it for today's video, guys. Again, keep in mind those big takeaways around Bitcoin, from price action to the ETF inflows or outflows in this case. I have to keep correcting myself here. It feels weird. I wouldn't have thought we'd be seeing outflows multiple times throughout the past few months, considering that people really saw this as being kind of the floodgate to open up money that's just been sitting on the sidelines forever into the Bitcoin market. I certainly would say that while, yes, we've got a couple tens of billions of dollars here in Bitcoin ETFs, people were talking about like it was going to be hundreds of billions, coming into this space, and it was just going to be a huge catalyst that was going to drive Bitcoin up into the stratosphere, and we are not seeing that here. So just keep that in mind here. Focus on the data, focus on price action, try to get your bias out of it, and that's a big area where a lot of people are going to mess up here, guys, over the next couple of months. We got to listen to price, and if price starts trending, I'll get back on the bandwagon. I'm going to start trading in some of the altcoin sectors that we're watching that are showing strength, and we'll be able to make great money again. But we got to wait for the market to give us that opportunity, because if you don't, if you're impatient, if you let the market take advantage of you, you will lose money. They will take that liquidity from you. And it's a really cold reality about markets. You got to be smart about it. Just here to look out for you guys as much as I can. You got to make your own decisions at the end of the day. I appreciate you all sticking around. If you made it this far, consider dropping a like. I hope you guys enjoyed this video. Much love for all of you out there. And I'll see you guys in the next video on Monday. Take care, everyone.